Stocks selling off today as investors grow more concerned about a slowing economy. The Dow and S&P 500 turning their worst session of the year so far. And joining us now is Tom Lee from Fundstrat Global Advisors. He's also a CNBC contributor. And Tom, it is great to have you on a day like today where the major averages are not only lower on the day, they're lower on the week. And the Dow, the S&P, and the Nasdaq are now also lower for the month of February so far. We teased it ahead of this conversation, the fact that you're seeing a contrarian bullish signal here. What is it?
Well, it's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher, too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Well, these inflation expectation surveys matter to the Fed because they're concerned about whether or not consumers are actually raising their inflation expectations, and that would, in fact, be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
Tom Lee of Fundstrat recently came out to a shocking declaration, forecasting a promising market recovery after the recent Nvidia earnings report. What is the source of such optimism, given also the fact that the bears are still out in full? Let's unravel what Tom Lee talked about and dissect his future forecast and new predictions for the volatile stock market. Welcome back, everyone, to Investocracy.
So, Tom, if I recall, in Q4 last year, you were warning about market turbulence, and we've been right now at around S&P 6,000. We're at the level where we were a month ago, a month before that, a month before that in late November. Should we also expect turbulence at these levels at this point, given that the macro narrative and the political landscape is still unclear?
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
Okay, so tell me about these granny shots that you've got, you know, part of your investing strategy, some specific stocks, especially since growthy stocks seem to be especially vulnerable on days like today. And if we're going to get more volatility, it sounds like we might get more days like today.
Yeah, that's possible. But investors really want to own stocks that actually have structural advantages. And that's best evidenced by revenue growth, margin expansion, earnings growth, and reasonable prices. So the reason growth stocks will still outperform is that in a period like this, if we have macro uncertainty, they're going to be names with some visibility. It's not pleasant to own a growth stock today, but we know the lesson of 2025 is that these pullbacks have not been deep and investors have been buying these dips. So I don't think today is any different. In fact, it's no different than the DeepSeek panic or the tariff day panic or the CPI panic. So, I think this is going to be a buying opportunity.
Tom Lee's optimism is rooted in several factors, primarily the potential for buying the dip. During recent downturns, trends indicate investors are inclined to seize lower-priced stocks, laying the groundwork for a market rebound. With Nvidia's earnings report gracing investors recently, it acts as the catalyst to fuel the stagnant market and start the best time frame for investors to do what they do best. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yeah, well, it's hard to get straight answers out of China, especially from the Chinese government. Josh Brown, there are a number of other stocks in the market, and I'm thinking about software mostly here, that follow NVIDIA's lead. And I'm putting Dell and Supermicro and some of those equipment makers aside. What is your expectation for how the AI trade overall digests the overall optimistic story that Jensen not only told to analysts, but told us here on CNBC tonight? What does that mean for the overall narrative of AI's growth and potential?
So I think, broadly speaking, people are going to wake up tomorrow and digest 48 sell-side notes, most of which will be some form of overweight / bullish / accumulate. I know they keep coming up with new ways to say we like the stock. But on balance, what they're going to read from the analyst community is, I think, once again, like a sober version of awestruck. I think the sell side is going to try its best to keep its enthusiasm in check, but they're talking about the second half launch of Blackwell Ultra on the conference call. And somebody's like, well, wait a minute. You had a hiccup with Blackwell. It launched a little bit late while you dealt with that. Are you still seriously coming out with the upgrade already in the second half of this year, the new version? And Jensen's like, yeah, we're doing this. So I feel like you're going to get a buoyant tone from the sell side. And I think that will extend to the other names that you mentioned, John. But NVIDIA is really unique. I don't think there's a substitute. And again, at 29 times forward, there doesn't need to be. I don't think you have to buy the fourth best. Look at the people that bought AMD a year ago. It's in a 50% drawdown. You know how many people bought that stock saying, I don't know, Lisa Su and Jensen Huang, they're actually cousins. Jensen used to work at AMD. I missed NVIDIA. I'll buy AMD. I always find that to be a mistake. It's not that none of the peripheral stocks can work. I guess what I'm saying is if you have a portfolio without NVIDIA and you're trying to make a bet on autonomous vehicles, machine learning, augmented reality, virtual reality, data center, don't miss this name and don't go looking for the poor man's version.
Tom Lee points to NVIDIA's robust performance history in defying bearish expectations, suggesting an upward trajectory will soon unfold. Furthermore, amidst the turbulent news about the new chip export restrictions, inflation might present itself tamer than feared. This could encourage the Fed to caress interest rates with a gentle slash, inviting tailwinds for stocks to glide higher. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Your favorite, and it's working. Cathie, you're meeting with clients talking about AI. How much are they talking about the possibilities and trying to understand that and the performance that they need for those possibilities versus concerned about costs at this stage? Where is the conversation with these people you're talking about?
The conversation is very little about costs, very much about possibilities, and also very much about the completely different paradigm that some of these technologies require in terms of thinking about ROI? What does it mean to figure out the value of a generative AI system working at scale in the enterprise? And so what we see is for individual users, it's enough that it feels useful. But scale demands to be measured. When we're going to do things seriously at scale in the enterprise, you have to rethink all your frameworks of value and of automation. And we are on the cusp of management getting the hang of that. And that is going to be such a phenomenal blossoming of use cases. And then we're going to talk about, oh no, how do I actually get enough of what I need, not just in terms of hardware, but also in terms of experts who can help.
All right, Josh Brown, last word for you here. Is this the place where you can buy Nvidia still?
Yeah, I mean, I would love it. It rallied 4% into the print tonight, so I would love it if it pulled back 4% for people that are not in it. I'm not buying more just because it's already big enough in the context. It's a 10,000% return since 2015. So I don't need more Nvidia personally. But if somebody does not have this in their portfolio, I don't think it's a wild stab in the dark to be buying it here. And quite frankly, if you're not in it, I think the lower it goes, the better.
With past historical performance and Tom Lee's vision lighting the path, investing in Nvidia is painted as a savvy move. The stage is set for a recovery, one amplified by potential economic shifts favoring tech stocks. As of late February, shares flicker with renewed vigor, spurred by bubbling pre-market enthusiasm and promising forecasts. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.